Welcome to Global One Media Stocks to Watch. I'm Michael Suido. Joining me today is Tom Meyer. He is the president, CEO, and director of Archer Exploration. They're a Canadian mining company that's focused on nickel exploration. Nickel is a key component, you may recall, in electric vehicle batteries as well as stainless steel. And Archer Exploration says its goal is to, quote, unlock the full potential of their nickel resources and contribute to a cleaner, more sustainable future. Got to say, I like the sound of that. Tom, thank you for joining us today.
Oh, thank you for having me, Michael. Yeah, excited to speak with you.
Awesome. So I understand you have about 25 years experience in the mining industry as an engineer, an analyst, and now as the chief executive of Archer Exploration. You joined the company about a year ago. So tell us, what did you see in Archer's business that led you to say, I've got to work there?
Well, this portfolio of nickel assets was hidden in the Walbridge mining, which were focused on gold. So we announced the transaction in July, and just the technical review of the large package that we have in Sudbury, but also the Grasset Project in Quebec, it piqued my interest. Just the nickel fundamentals are excellent in the medium to long term. And the asset quality, being in the Sudbury camp, which has over 130 years of mining activity, primarily nickel, and essentially a relatively new discovery at Grasset, which was discovered in 2012. The complete review from a technical aspect said that this is a phenomenal portfolio, and was very excited to join the company just about a year ago. So that transaction was announced of July of 2022, and then we closed the transaction in November of 2022, and we commenced the programs, the early work in early last year. So yeah, very exciting asset portfolio of high quality nickel sulphide assets.
So essentially, you took your 25 years experience, you looked at what Archer has, and you said, I think there's really, that we're going to strike gold here.
Oh, no,
To
absolutely.
be more
Yeah.
exact. Yeah.
to be exact. Yeah, Michael. Yeah, absolutely. And that's one of the interesting things, like, as an engineer, early days, working for Inco and Falconbridge, I did have involvement in nickel projects in Sudbury, and seeing all aspects on the processing side. And then working as a mining analyst, commodity analyst. So from the mining side, I've toured hundreds of projects around the world, Latin America, Sub-Saharan Africa, Western Australia, and looked at all commodities, mainly the base metals though. So I was able to, really appreciate what makes a great asset portfolio when it comes to exploration and development, and like what projects actually make sense to actually move forward. And the Archer portfolio ticks all the boxes, and I think investors are quite excited about what we have and the work that we have before us in unlocking that value, because it's quite the special portfolio for sure.
The Grasset project that you mentioned in Quebec, this is the cornerstone of your company's portfolio. What makes it stand out?
Well, Michael, yes, a 2012 vintage discovery. So this was a nickel project that was discovered in 2012. It was discovered by accident. The previous owner, Balmoral Resources, they were looking for gold in the Abitibi greenstones, and they were in an area like literally off the highway, so a well-located gold project. But they did a 500-meter step out on a gold target, and they accidentally discovered nickel. So it was very serendipitous, of like, and again, a new discovery in that camp, kind of unexpected, so very exciting. And so with that, we've been essentially following up from the beginning of this year, the very good work that team did, and just moving it forward from the perspective as a nickel sulphide focused exploration and development company. So we've got a 23-kilometer favorable trend of ultramafics, and we're literally just scratching the surface. And I think from an investor side that we have an existing resource, so we have something very tangible. We've got 5.5 million tons of an indicated resource at 1.53% nickel equivalent, and that grade stands out. That's a high grade nickel sulphide, and our objective is to double, triple that resource, but also bias the grade higher, which the results to date show that we've got that potential to find more of the massive sulphides and move that resource grade even higher beyond that current high grade 1.53% nickel equivalent.
So you mentioned the high resource grade, and for those of us who are not miners, my understanding is that means the nickel is easier to extract. Is that correct?
In some cases that's true. In our case, that is true. The metallurgy is quite simple. It's a conventional flow sheet, but I think most important in the context of the decarbonization and a green new world, when you have a high grade nickel sulfide, it just requires it requires a lot less capital to get the same amount of output. So if you were, say, dealing with a 0.2 or a 0.3% nickel project, you're looking something that could be on the extreme about 10 times the size needed to get the same nickel output. So when you look at what we characterize as the kind of the carbon or the energy intensity to extract the nickel and turn it into a nickel product that can be used for cars or for batteries in cars or in the stainless steel sector, that having a very high grade nickel sulfide resource to turn into nickel product is much more friendly for the environment, and just also from the standpoint of development, it's a lot less capital intensive. So it is something that is doable, conceivable. It's not a multi-billion-dollar mine development. It's a few hundreds of millions of dollars to develop our high-grade nickel sulfide assets.
Okay, so I hear that it's easier on the environment, takes less capital, and I saw that you shared in LinkedIn that this project has one of the highest resource grades in all of Canada. So that's awesome. Correct. So I'm wondering, I also heard that the geography of your sites may present some hurdles to mining exploration. Is that the case?
Well, it's more the case, Michael, that so the Abitibi, where we are in the Abitibi, it's covered by glacial till. So we've got it in some parts of the deposit, 80 to 100 meters of sand and gravel burying the deposit. And that's one of the reasons why it was only accidentally discovered in 2012. So unlike other projects, like we have the famous Voisey's Bay in Eastern Canada that was discovered in the mid 90s, that deposit outcropped. So the geologists literally stumbled over the deposit and were able to drill and have a phenomenal success with Voisey's Bay. In our case, with the glacial till, that cover creates some challenges, but also opportunities. So the challenge is that we have to use the latest technology, and so some of that involves, as we have done, base of till sampling. So we'll drill through that sand gravel cover to the base of the rock and see what anomalies are there. We also use very high-powered geophysics to provide indications of where drill targets could be located. So by the combination of high-tech, high-powered geophysics, base of till sampling, that is a starting point for us to locate holes. But in the meantime, the work that we've got before us at Grasset is to grow that resource of 5.5 million tons, and we can do that mainly through our drilling and some downhole electromagnetic surveys, which is again is a fancy way of saying a high powered technology to let us see through and identify targets to drill.
All right, I want to turn from the drilling to the economics now. As you know, interest rates are much, much higher now than they were just a year and a half ago, and companies in all sorts of sectors are facing significantly higher financing rates on their debt. I'm wondering, is this an issue for Archer?
Well, the backdrop, obviously, the macro environment and the backdrop economic environment does create some challenges. And for us, we're not in production, so we don't use debt to fund our projects. We go in to the equity markets and raise equity to fund our projects. But with the high interest rates and some of the uncertainty with global growth, that does create a bit of a discount for companies that are in that development stage. So we're not cash flowing. So I think if investors they look at what's kind of transpired over the last year and a half in particular, there's a bit of a disconnect between like the fundamental value, kind of the real assets of the pounds of copper or pounds of nickel in our case, and in the case of the gold and silver companies, the value of the metal in the ground has been heavily discounted just because there is a bias towards cash flow in the current environment with that high interest rate. But it is more just with the valuation impact that it's had for us, but we tap the equity market to fund our programs.
So speaking of equity markets, just this week, your company announced that it's raising 1.5 million Canadian dollars through a private share placement. How's that going so far? And tell us, how do you expect to use those proceeds?
Yeah, it's going very very well, Michael. And the use of the proceeds is a very focused program around some success that we had we announced back in June, where we encountered we call it hole number 3. We encountered 1.82% nickel over 4.6 meters. So what raising the money, it will be a very focused drill program around that hole 3, which essentially for people is more of an infill type program, where we think we've got some opportunities to add a few million tons by drilling holes around that hole 3 and just better define the high grade massive sulphides. So it'll be a very, very focused program for drilling. And at the same time, we have, which I'll just touch on very briefly, we've got a very large portfolio, actually the 3rd largest land package in the Sudbury Basin. So we're raising money as well to do some geophysics and some planning for drill work in our Sudbury portfolio. But the focus for us and for this capital raise is really around Grasset at the moment, because it's low-hanging fruit, so to speak, from an exploration side.
Well, investors love low-hanging fruit. And speaking of investors, I have one last question for you before we go. For the investors, many of whom are young, watching this video today, what is your message to them, and what sets Archer Exploration apart from its competitors?
Well, number one, we've got a phenomenal resource opportunity to grow at Grasset, and we've got a very large land package in the Sudbury camp, which has over 130 years of nickel production with significant infrastructure. So from an asset base, we are in a pole position, so to speak. For the younger investors, mining and resource development, this is a value creation from nature, and we've got that before us. And I don't think we can have a world that functions well without high quality sources of nickel and base metals. So this is a sector that is very exciting in terms of the technology that we use, and then supply to the future world of a decarbonized world in the sense of the passenger fleet and using more of EV batteries, but also in high tech stainless steel, high tech rockets that we see Elon Musk and Jeff Bezos building. So all of this technology requires a source of high quality metals, and that's something that we can deliver into this kind of new and growing world. So from the younger perspective, lots of excitement, and just this sector deserves a tremendous amount more attention. Because we are high tech at the end of the day, we just don't get the kudos that many of the so-called tech entrepreneurs get. But we are adding value in a tremendous way.
So it sounds like one day the nickel that you're exploring, that you're prospecting for, might take us to the moon and beyond.
Yeah, absolutely. Yes.
All right, Tom, thank you so much for joining us today. I've been speaking with Tom Meyer. He is the head of Archer Exploration, and you've been watching Global One Media's Stocks to Watch. I'm Michael Suedo.
Thank you very much, Michael.